Gold is currently standing at a historic crossroads. As of today, Wednesday, July 29, 2026, the precious metal has successfully defended the massive $4,000 psychological level, but it is facing significant resistance. Traders are watching the charts with intense scrutiny as the price stalls during an intraday recovery attempt near the $4,050 mark. This is not just a routine price movement. We are witnessing a massive standoff between bullish momentum and a cautious market that refuses to push higher until a major catalyst arrives. The question on every investor's mind is simple: can gold break past $4,050, or will the $4,000 floor hold against the coming storm? The tension in the market is palpable, as the entire commodities sector waits for a signal from Washington. The primary reason for this market paralysis is the upcoming Federal Reserve policy verdict. Every major player in the gold market is bracing for the FOMC decision. Historically, gold and interest rates share an inverse relationship, and the market is currently pricing in extreme uncertainty. We have seen gold struggle and plummet to monthly lows in recent months as traders grew anxious about the Fed's trajectory. However, the current environment is different. We are seeing a defensive posture where gold is holding firm despite the uncertainty. This suggests that investors are using gold as a crucial hedge, waiting to see whether the Fed will signal a pivot or maintain a restrictive stance. The verdict from the FOMC will likely act as the ultimate trigger for the next major trend in the Xauusd/USD pair. To understand where we are, we must look at how we arrived here. Throughout July 2026, gold has been on a volatile journey. Earlier this month, we saw gold prices attempting to recover after being suppressed by cautious sentiment regarding U.S. economic data. We have watched the price bounce off the $4,000 level multiple times, showing incredible resilience. For instance, back in late June, gold saw a significant recovery after U.S. PCE data matched expectations, proving that economic data remains the heartbeat of gold's movement. More recently, we have seen the price struggle to find its footing as markets weigh the complexities of the current economic landscape. This pattern of defending the level suggests that the $4,000 mark has become a foundational floor for the asset in the current macroeconomic cycle. Gold does not move in a vacuum. While the Fed is the headline act, other global factors are playing a vital role in supporting these high price levels. We have observed that recent respite in Middle East tensions has provided some breathing room for buyers, yet it has not been enough to spark a massive breakout. Simultaneously, we are seeing a fascinating interplay between gold and the energy markets. A recent slump in oil prices has been a key factor in the price forecast for Xauusd/USD. When oil prices drop, it can signal shifts in global inflation expectations, which directly impacts how the market views gold as an inflation hedge. This combination of geopolitical tension and fluctuating energy costs has created a complex environment where gold is caught between opposing forces. Beyond the Fed, the broader U.S. economic data set is acting as a constant tug-of-war. We have seen gold prices capped by uncertainty surrounding U.S. CPI and other key indicators. When inflation data comes in, it dictates the Fed's next move, which in turn dictates gold's direction. We have also seen how specific data points, like the PCE, can trigger rapid recoveries. For investors, this means that the volatility isn't just coming from a single meeting, but from a continuous stream of economic reports that force the market to recalibrate its expectations for interest rates. This constant recalibration is why we see gold stalling near $4,050. The market is essentially waiting for a definitive truth in the data before committing to a new direction. Looking at the immediate horizon, the technical setup is incredibly tight. Gold has successfully defended the $4,000 level, which serves as a massive support zone. However, the $4,050 level is acting as a formidable ceiling. If the Fed's decision provides any hint of dovishness, we could see a rapid breakout above $4,050, potentially leading to a much larger rally. Conversely, if the Fed maintains a hawkish stance, the market may test the $4,000 support once again to see if it can hold under pressure. Traders should be prepared for extreme intraday volatility. The current tall is the calm before the storm, and the direction of the next candle will likely be determined by the words of the Fed officials. As we move through this week, there are three key elements to monitor. First, the FOMC statement and the subsequent press conference. The nuance in the language regarding future interest rate paths will be more important than the decision itself. Second, keep a close eye on U.S. inflation data, as this remains the primary driver of the Fed's logic. Third, watch the oil markets. Any sudden shifts in energy prices could shift the narrative around inflation and gold's value. For those trading Xauusd, the combination of these factors will create high liquidity environments that can move the market significantly in a very short time frame. In conclusion, gold is in a state of high-stakes waiting. It has shown immense strength by holding above the $4,000 mark, but it is currently stuck in a tug-of-war near $4,050. The Federal Reserve's policy verdict is the ultimate catalyst that will decide whether gold enters a new era of growth or returns to test its support levels. For investors, the takeaway is clear: volatility is coming, and the $4,000 level is the line in the sand. Stay vigilant, watch the Fed closely, and be prepared for a significant market move. Thank you for watching this deep dive into the gold market. We will continue to monitor these developments as they unfold.